What up, HyperChange? Welcome to another episode. Today I'm in New York City at Public HQ. We've got CEO and co-founder Jannick joining us today for the podcast. Jannick, how are we doing?
Good. How are you?
Great. So I've been an OG Public fan. If you're watching the channel, you probably know, but for almost like 5 years now, following you since you had 5,000 or less users.
That's right.
And y'all just had an amazing 2024. So can you fill us in a little bit? I know you don't want to dive too much on the numbers and stuff, but tell us about what you were up to last year.
We've been able to finally, I would say, deliver on some of the promise that I think cements a lot of what we've always stood for, which is, take investing seriously, build a long-term kind of tried and true portfolio, and the fixed income markets and bonds specifically play a big part in that. But there was a few years where we got to know each other at the beginning where I was talking about a lot of long-term investing, but at the time, GameStop was all the rage. And so people were a little bit like, and, there was sort of like it was maybe hard to see the cohesion in all that. And I think 22, 23, 24, we've really been on this path of continuing to build up our roadmap. I think we put a blog post out at the end of the year. The folks can look at where we actually showed the growth in gross profit per user.
Yes,
and what's funny to see is it's directly correlated with our shipping velocity. We put up a chart that shows actually what major features we've shipped last.
Yeah, it's super impressive.
And last year, I think we shipped a major feature every 2 weeks on average,
wow,
which was just wild. And that's just been expanding the platform with more asset classes, more account types, a lot of the AI research things we dived into, which is turning out to be a superior way for folks to actually research their investments and make more informed trades. And so there's just a lot that I think has really come together, in a way where I think we always hypothesized and we always had that vision, but I think it's been probably the single most fulfilling year, for me at least, of building Public, because I think it's the year where we delivered on most of the vision that we've always kind of talked about and what we consider Public being very great for, who we consider it being very great for.
Yeah.
That's been very, very satisfying. And so a lot of numbers have gone up an order of magnitude. Some of those folks can kind of check out in that blog post we put out. Well, we actually disclosed a little bit more than we usually do.
You're usually like tight-lipped, but I think Life, even, he's like your co-CEO, he tweeted something about like 100% revenue growth this year or something. Yes. So congrats on that. And I mean, it's fascinating to see this era of like so many brokerage companies, like kind of in the 2020, 21 era. Like it seems like everyone was standing them up and there was so much competition and kind of everyone had the same thing and everyone's trying to copy, I think, Public's huge first innovation, which was the fractional share and being able to follow investors.
I think everyone did.
And that was like being able to trade for free with a fractional share. Like that was something that I always thought was super like amazing about Public, because it makes it accessible for someone with $500 to create a diversified portfolio. And that was like such an unlock to democratizing finance. So it was amazing to see like that kind of product, but it's been insanely cutthroat where you've had to innovate nonstop to be able to stay ahead of the game and kind of work through this trough. And you've been able to just grow and crush it through that incredible trough that washed out pretty much all of the competition besides almost you 100%. And Robinhood. So first of all, huge congrats to that. So it's been super cool to watch and there's a ton of momentum. So now I almost want to turn to, what's next. You've been dabbling with this sort of AI app. Talking a lot about the great wealth transfer that's about to occur and this idea that going to some branch with an old school financial advisor to manage your wealth is still kind of how the bulk of capital is done. Yeah. Sort of the last generation's way. You made that ad about kind of like roasting that. I'll play that, which is super funny. But how are you feeling about sort of the state of financial markets right now with these legacy brokerages still having much of the wealth? But clearly their product and services not matching what this generation is looking for.
So a few things to dive into. I think first of all, to your point, fractional shares, I think we'll look back at historically and say that was a huge unlock for just like people joining the stock market. We then actually since then made fractional bonds, treasury bonds, even corporate bonds, which is I
want to dive into that too.
In many ways an even bigger unlock, right? Because like the minimums there are sometimes is the 50 or hundreds of thousands of dollars. Now, and that's actually been a big reason why we've been able to sustain our growth. Like a lot of people were talking about like post 2021 correction and fintech and this, that, and the other, and we were sort of quietly sitting there just basically doubling every year. And that was the thing where we were like, well, you know, yes, the equities markets took a hit, but the bond market came back. And bonds is just an area that hasn't seen any innovation really for a very long time. There isn't even a mobile app we found where you could actually invest in bonds, because the last time yields were this high was pre-iPhone, right? So nobody,
Wow.
And then they've been zero basically. Right, actually, ironically,
Yeah,
just when the iPhone
because I'm
came
thinking
out,
like I take for granted
financial crisis,
like,
rates went to zero, and then they practically stayed there.
and we're a ZERP generation. Like I've
We're
been
a
a
ZERP
ZERP baby,
generation, totally.
and the whole idea of a bond is like such a joke to me in my head. But then as I've been getting older and thinking, like seeing yields rise, and then comparing that to like, you know, the yield on the S&P right now. So a 30 times price earnings multiple for the S&P is like a 3% earnings yield, growing at what, 7%. So if you're getting a 5%, 7% bond, it starts to make a lot of difference there.
Totally. And I think that's exactly the sort of educational journey that I think a lot of people are on, where I think they've been taught to just look at equities, then crypto, which really has no fundamentals compared to equities. And I think when you start to expose folk to the world of fixed income, and you go on public and you can buy both sides of the balance sheet of all these companies, which is a pretty unique sort of thing to be able to do.
That's a cool way to put it.
And so I think a lot of that drove a lot of the growth for us. Drove a lot of this notion of, hey, if I take investing really serious, I should probably go to a platform like Public, where, you know, first of all, the number of assets that we offer, the kind of account types that we're rolling out, but even things like we launched this feature called Income Hub, which literally shows you every month how much you're getting in cash flow and yield from your portfolio. So back to this idea that you were just talking about, thinking about the yield on your portfolio across dividends from stocks as well as interest on bonds.
Wow.
Right? And so like when that all starts to come together in the product experience, which I felt like I said earlier, really felt like that happened over the course of 2024, then it just kind of comes with a lot of growth. Now, so I think that's my first comment. The second one is, to the great wealth transfer point, what all of this kind of roadmap delivery that we've been on, like what that did for us, I think has put us in a little bit of a pole position when it comes to the great wealth transfer. So the great wealth transfer is $100 trillion of wealth being passed down, mostly from baby boomers, mostly to millennials. Sort of like a bell curve distribution of the baby boomer generation, with a little bit of before and after, and going to a bell curve across the millennial generation, with some of it going to the younger Gen X, some of it going to Gen Z, but that's going to be the greatest wealth transfer of all time. And I actually had in our Series A pitch deck back when we met each other that was going to be the thing that really drove a lot of innovation and market and value creation in the fintech space. At the time, the number was 30 trillion. And now it's actually been inching closer to 100 trillion, just with market appreciation over those last 6-7 years. And so I think the way I think about the world of consumer fintech at large is the first 10 years were really about finance going mobile. Therefore, it became gamified, your $100 paydays loan, gamified meme stock trading, etc. And as the saying sometimes goes, you know, the next generation of important companies can initially look more like toys than tools. That's exactly what I think what has happened in the first 10 years. But I think in the next 10 years, it's not about finance going mobile, it's about the great wealth transfer. And it's about fintech really stepping up and like delivering on the promise of all the value that it can create. And I think that's a little bit how we're thinking about the future. And that's also what really goes into most of the decision making in terms of what to build next. Because I think that's where the real market value is created. And another thing to look at is just when you actually look at a lot of those incumbents, a lot of the legacy players that are really antiquated, it hasn't really been disruption in the last 10 years because their market value is actually all up. They're all up 2-3x over the last 10 years.
Yeah, like
so it's not like any disruption has really happened in the sort of Netflix blockbuster style way of looking at it, where it's just a direct transfer of market value.
Yeah, they're not dinosaurs yet.
Exactly, because most of the
living dinosaurs
started in this era of like finance going mobile, became very gamified, like toy-like experiences in many cases.
Yep.
And that's totally fine, I think, for fintech to have that be chapter one, its first decade. But I think the next decade, you're going to see a lot more of actual disruption as, again, people start to build more wealth, who are sort of more in the millennial demographic, inherit wealth, build more wealth for themselves, and they have to sit there and decide who they want to do business with.
And it's fascinating because maybe the market cap hasn't been disrupted, but the business model has, like the commoditization of zero fee trading.
Yeah.
You know, a lot of assets, like I was on Vanguard trying to buy IBIT, the Blackstone Bitcoin ETF, they wouldn't let me.
You can't get it.
I was like, I couldn't believe it, let alone fractional shares and that kind of thing. So it's like, I think it's interesting that like, but the free trading has made it to all these other brokerages. And so then that analogy of like, you know, Public and Robinhood may have seemed like toys at first, and almost, but now I feel like if I was Vanguard, Fidelity, Charles Schwab, like their entire board meeting is like, they're like, it's just a tsunami is coming from them that they're just
I think it's like zero
for.
commission is really more of a business model innovation than it is a technical one. I mean, like to go zero commission is one line of code.
But
to be clear,
from the
right, it's
consumer's
literally like you go in one
like
day.
Huge.
No, I get it. It's massive, and it will always be a huge thing in our industry. But it's just, I think that's why everyone could adopt that because it's one line of code.
Yep.
It's literally like, it's just they were trying to not do it because it was such a good business for them to be charging these high commissions, and so they were trying to charge those high commissions as long as they possibly could. Whereas fractional, not one line of code. It required a lot of regulatory innovation. It required a lot of like rethinking how trading systems are built to do that for bonds, even more so. And so I think that's where you're going to see now folks like us, and I'd say folks in our cohort, just like continue to move at a much faster pace, continue to actually innovate and deliver a lot of product value and unlock a lot of product value that will be hard to just kind of replicate overnight, because zero commission was very easy to replicate, because you just go and say, hey, change one line of code and now nobody gets charged a commission, right?
And it's an engineering software business versus these like business kind of businesses. It's almost like they have totally different talent. And so I want to give you a tough question now. It's, you know, and as incredible as it has been that Public's navigated like the past 5 years, and I would say almost now it's like feels like green space, like markets are ripping. I think the Texas Stock Exchange is going to open. I get a new window. We're in the early innings of a massive new bull run potentially. Maybe the S&P is a little bit overvalued now, but in the long run I see like a massive sort of new era coming. How do you think about Public's competitive position, and how do you navigate and continue growing at this insane rate and winning market share when it's so cutthroat? Like, how do you think about yourself versus Robinhood? How do you think about yourself versus Charles Schwab, Etrades, Fidelity, who are all watching every move you make, trying to copy it as fast as you can? Like, it's an extremely, you know, we're talking about this $100 trillion thing. It's a massive pot of gold. A lot of people are rushing for it. How do you think Public, what's your strategy to sort of stay ahead there?
Well, I think it's less cutthroat than it was in 2021, actually, to your own point. Everyone and every single, like PayPal wanted a lot of stock trading, right? Dave Portnoy was like trying to launch a brokerage, like that was happening every week.
They were spinning up left and right.
It was spinning up left
some
and
new
right.
stock app, totally.
And I think now that all have died down, nobody's really come back to the table. I don't think you see new venture funding going to kind of neo brokers. So I think now it's a little bit more like the field has been drawn up, and it's a little bit more clear who the players are, which from a competitive standpoint makes it actually easier, so to say, to compete. Because I think the best way to compete is always to like just really own a corner of the market that you do better than anyone else, rather than just being directly head to head, right? Like we never wanted to be in like a Pepsi Coke type situation, but really more it's like Coke versus, I don't know, some new kind of spirit that maybe is lower calorie, and you know, like it's got a bunch of other attributes and a bunch of other features. Like that's how I think about it. And so what that is for Public today is basically, if you take investing, like I think the customers that come to us, many of our members, they take investing more seriously. Like I told you, we've always stood for more longer term investing, less sort of the gamified kind of trading stuff. You can come and speculate on Public all you want, but we really built the product, and the roadmap is designed for folks who want to invest, build a long-term, tried to stand the test of time portfolio. Fixed income is a big part of that. Various features we have on the equity side is part of that. And the AI research stuff is a big part of that too. Because at the end of the day, if your trading strategy is just you want to have fun, and it's instead of going to the casino, you don't need an AI research tool to 10x your research efforts, right? Because why do the research? You're really doing it for fun.
Yeah.
And that's totally fine, by the way. And a lot of people do that. And I do that myself sometimes, but just with very small pockets of my overall capital wallet, right? And so the AI thing has been massive for us because I think, again, the last 10 years were really about unlocking access, fractional shares, now fractional bonds, etc. So now everyone can build any portfolio they want. Now it's going to be the question of what kind of portfolio do you build and why? And I think that's where, with the inflection point with AI, is so interesting, because if fractional sort of democratized access to markets, I think AI democratizes sort of analysis and research and information in and around the markets.
Wow.
And there's really, if you have a team of a handful of analysts, that used to be a big edge for you if you're a small money manager or something like that. But now it's not really. It's very quickly becoming that's not the case, right? Because you can analyze any company you want in real time very, very fast for some of these features. And in fact, so with Alpha, where we started off, was like you swipe down on the stock, you ask any question about the stock.
And Alpha is for the people watching, your AI.
That's our AI.
The name of your AI within
exactly.
that.
And so it started being embedded into public, where we realized, hey, instead of like going down on the stock page and looking at earnings and doing it, just swipe down, ask any question about the stock. Swipe down, opens like a chatbot experience, you can ask any question. And then we've wired that directly to market data, because what would happen most of the time, we found with like the ChatGPTs of the world, et cetera, they go and scrape the internet, they might find a 3-week-old article that references the PE ratio from 3 weeks ago. That's not really interesting to folks. So like by wiring it directly to market data, you come down massively on hallucinations. We've done a lot of work also to make sure that Alpha can actually say, I don't know, rather than trying to give you a false answer, because
that's a Warren Buffett thing. Know what you don't know.
100%. But I also think, and that's where people start building trust in it, because I think you look at finance, you look at, I have another friend who's building an AI company in the medical space. Like, it's a little different than the code compilers, right? Like, at the end of the day, the code will either run or it doesn't, and if it doesn't, you debug it, and then that's fine. But if you're using AI in finance, in the medical field, like the tolerance, like the cost of getting something wrong is much greater.
Yeah, it feels
so
like it'll be later. It's like a later wave. Yeah. Like I'm thinking, I use ChatGPT for cooking all the time. Like if it's wrong, totally. I'll figure out how to fix the salmon.
As long as it doesn't fuck up your allergies, you're fine.
yeah, exactly. But I think so. That's such an interesting thing, and like I feel like right now, like the AI, I try and use all the AIs for investing, and I feel like none of them are like you can tell everyone's close. But it's still like almost like lagging of, like you just said, of all the other AI use cases of actually being useful. So I'm super curious to see how that evolves personally, because I'm always dabbling with AI and I'm like, you didn't miss the reason why Rivian juiced their gross margin numbers and it wasn't actually a legit win this quarter. Like if I can see through that, you should be able to see through that, you know? And then the I don't know, I'm always fascinated by the number thing, because you're giving away all your trust. And if one number is off, like it totally ruins the whole thing. So it's such a complicated kind of thing. So I'm curious, like how, you've been developing Alpha for almost a year or so now.
Actually, 2 years.
How's it going, being kind of like, give us a little sneak peek of under the hood of developing like the world's smartest investor,
So first of all, the trust thing I think is key, and that you're absolutely right. In many ways, Alpha has a lot of technological kind of problems, but at the end of the day, from a user adoption perspective, it's just a trust problem. What's interesting about trust is that trust is built over time, meaning with every interaction that you have with something, it either adds to your trust or it sort of reduces the trust that you have in the thing, right? So every interaction you have with Alpha should be building your trust in Alpha. So with that, we started thinking about, in the beginning, Alpha was mostly reactive, meaning you go to the stock page, you hit the button, you ask a question. But we already know what you own because we're your brokerage, right? We also know what you're interested in. We know what you've been researching in the past. So we started making Alpha more proactive. There is no reason when I own Tesla that I should go and ask it for an earnings call breakdown summary of the Tesla call. If I own Tesla, the minute it wraps up, it should just send me the summary.
Yeah.
And so that's actually where Alpha is today. That's what we very sort of recently launched, the ability for just like, and it's more of like a gradual thing that we're sort of rolling out. Alpha is just becoming more and more proactive, which means you build which means the number of engagements you have with alpha goes up and up and up and up. Adoption goes up. I mean, at this point, pretty much every user we have uses alpha one way or another. Now, as we've seen that happening, one of the key metrics, which is how we sort of evaluate trust, is what we call the actionability rate. And the actionability rate you can basically think of as like, our news section has an actionability rate of like 1, maybe 2%, meaning if you're reading news about a company 1% of the time, you'll take action on that through a buy or sell order, typically.
Oh, yeah,
right?
yeah, okay.
With social, that stuff was always like between 4 and maybe 7 at the peak. With alpha, it's like 30-35%.
Like they're really making a decision based on that kind of interaction.
Based on the research that they do with alpha. And that's like within a couple of hour window, right? Or at least within the same trading day. And so when the actionability rate just has continued to climb, I think that is a clear indicator for us that trust is continuing to go up. Obviously, the usefulness of the tool itself as well. And at the end of the day, what it gives people is time, right? It's less time sort of doing a lot of the grunt work of researching your portfolio. At the end of the day, most people on public aren't full-time traders. And so they've always been at a disadvantage from a time perspective, and now they're not. And so again, the last 10 years was very much about like unlocking access. Don't be at a disadvantage because of lack of access. These next few years will be about don't be at a disadvantage because of lack of ability to analyze, time to analyze, access to research.
And it's bringing me back to HyperCharts, which Public acquired, and our whole thing was like turning the SEC filing into a manageable, digestible 100%. Thing, and democratizing that kind of access, so you didn't have to go through the filing. And now Alpha, using that data, and
HyperCharts very much lives on in Alpha in that way. 100%.
Which is like
if you go on Alpha right now and ask what's vehicle delivery in Tesla, like it will generate a chart that actually shows that.
Yeah, it's like
which was
the AI is like giving you HyperCharts, which is the whole vision.
It's like the AI is doing all the stuff HyperCharts were doing, right?
And it's turbocharging it.
It's
like
totally,
and it kind of you become this Iron Man who can like get a totally you just the ability to understand things.
And by the way, you could be researching multiple different companies in very different sectors all at once, which is like very difficult for like a person to kind of do, like jump in and out of, go deep of different sectors. Like you can have multiple kind of threads running where it's just researching all these kind of things for you. And so it empowers you to be a little bit more like the executive in the little hedge fund that you're sort of running. Yeah. It's just there are no other people and you're the only person that's your own capital, but you have all the brain power in the world just through compute. And that's what's so interesting, I think.
Fascinating. And so do you have any kind of like predictions, like looking forward, like you're working on this AI thing that could be a huge sort of, and it's interesting to think about what a financial advisor is and like a swipe down in an app to talk to AI, like it's different, but it's like replacing that, but it's like totally new in the digitally native, like, it's true classic disruption. So I wonder like, I don't know, with that and kind of like the bonds platform, crypto, like what kind of thing, you're always at the forefront of markets because you see what users are doing. You're scheming with, I don't know, the who's who of New York finance and, regulators, startup founders. So I'm always curious, like, where's your head at of what are the big trends for the next couple of years? Is that all AI? Is crypto continuing to like gain mind share as a store of value and financialize itself as an asset? Are bonds going to become cool for young people again? Like,
I think actually
all three, maybe.
All those three things are happening for sure. But I'll go about it a little different. Saying I think let's talk about actually what are because I think all of those are like, I'm fairly certain that is all just already happening, and that will continue to happen. The questions I think that are left are still, if you take AI for example. Is it going to be the case that an AI is going to completely replace a financial advisor? And you can make the argument of that being the case because if you break down what a financial advisor really has to be good at, they need to be knowledgeable around markets. They need to know what your investment goals are and think about those, sort of even when you're not thinking about those yourself. But then the third thing is, which is arguably the most important, they need to be likable. I don't know anybody that works with a financial advisor that they don't necessarily like, right? Or at least the best ones in the world are like highly like. Like look at Josh Brown, for example, right? Extremely charismatic guy, fantastic human being. And so what's interesting is with an AI, like yes, you can make it knowledgeable in markets. It will obviously have a great time understanding your investment goals, but it can take on personas too, which is what's so interesting, right? So you can actually, do you want like a risk on or risk off financial advisor? Like you can start to take that in many different directions.
I want to see them debate it out.
Exactly. So that's the case. I mean, there could be a whole investment committee, by the way, sending you the bull and the bear case for everything, right? And they take on different personas. So that's like the case for AI more, let's say, directly potentially disrupting the world of financial advice. But there's also just a world, frankly, where financial advice is more disrupted by just this next generation being much more self-directed in the first place. So they maybe don't need to rely as much on financial advisors as a thing because they've grown up with financial literacy. They've grown up with access to learn by doing and dabble without risking a lot of their capital. Social media has made a huge push in how people have been able to like find financial education, which you don't really have in school and all that stuff, but like channels like your own has been massively educational for a lot of folks. And so when that cohort, right, grows up and inherits $100 trillion, do they go to the financial advisor and be like, yeah, take 1% to 2% because you know this stuff so much better than I do? I'm not sure, right? I think they will actually put a lot of financial advisors to the test, like, what's your GLP-1 strategy? How are you thinking about semiconductors, et cetera? And I think many financial advisors, I think the average age of financial advisors in the US today is 60 years old. And so I think a lot of them will also just be, I think there's like around 300,000 of them, maybe 280, something like that. And I think they'll sit there and be like, having a hard time suddenly like justifying those types of fees, et cetera. And by the way, I'm mostly talking about like, I think the 1% or the 0.1% are always going to have very specific use cases for financial advice that go into estate planning and many other things, but just the investing aspect of things, I'm not so sure. And that's so for me, that's the outstanding question. Like I think AI will play a huge part of the future. It's more actually how it ends up really.
Totally.
And the crypto stuff, I mean, the ETFs, the ETFs of Bitcoin was sort of the IPO moment. Now you've just had some people call it the IPO moment. This was the WTF moment where it's like all bets are off. This thing is just going to go and kind of replace gold. And like all the people that said Bitcoin had no features now agree, most of them anyway, that it has features. The feature is that it's huge. The feature is that it's a $2 trillion asset class with limited supply. That is the feature now. And so, and the bond market will just, I mean, you've seen it being resilient even when equity markets and crypto markets have rallied. I think they'll just continue to be much more of a thing going forward. I don't see a path back to zero interest rates anytime soon, which means that for the next couple of decades, everyone has to start to learn and understand kind of fixed income and go more and more into that world. And that's exactly what we've been seeing as well.
And I feel like if inflation gets under control, then some of these like 7% bonds get a lot more attractive. I don't know if it would hurt their yields or anything, but I have so many questions. But I wanted to bring up just one story I thought of is my mom. I got her to open her public account and like leave her financial advisor. And like I've been helping her for a while with her money and like it's just going great and it makes me so happy. And like, so, you know, she's in her 60s and working on retirement and like the whole income hub is super important to her. And like, I went through the process of like interviewing financial advisors with her, like hearing their pitch, like, what are you doing? And it's like, no, like we built this awesome portfolio. We don't want you to sell it all immediately and take 1% and put it into something that's like the S&P, but it's not, and you just told us the S&P was too risky, but you have something that's like the S&P that it feels like you're getting paid to push. And it's just
totally
like,
the best pitch that I've heard.
Like sleazy, honestly.
No, it is.
Like I've, and actually my dad, he doesn't have a financial advisor either. And I, you know, so I've like really like lived this truth with like people in my life and I get them all on public. I have all my money on public. So and I see, you know, I'm probably early on it, but I really like feel it. Like it's not, you know.
No, but you're not alone in that for sure. And I think we launched something a month or two ago called the Treasury ladder. So we initially rolled out just like the ability to buy fractional treasuries, of course. Now we rolled out this like ladder UI experience where you literally just go and like you just pick kind of visually what kind of treasury bond ladder you want. So basically the ability to buy instead of just one bond that's locked for 5 years or 10 years or whatever, you just buy a whole ladder from the 4-week to the 30-year. you can buy all of them, and then it sort of is a way to manage your cash flow back to the income hub. That actually used to be one of the most powerful, I think, financial, like most friends that I know that are in a similar position have interviewed financial advisors. They came back to me and they're like, yeah, they couldn't really do that much sort of stuff that I hadn't thought about, except for this bond ladder thing. Like that was pretty smart. It's a good way for me to manage my liquidity.
Yeah, and the financial advisors pitching them how like, oh, whoa, we got this bond ladder. Like it's pretty crazy.
Exactly.
And I'm like, that would have been a whole class. Like NYU Stern, just up the block where I went to school. We would have had a 3-month class of this is bond ladders. Look how fancy you are. You're going to work at Goldman and do bond ladders. It's like public is a one click and everyone has it.
Exactly.
And it's just like.
And that's like, you'll see more and more stuff heading like that is the trend, right? That is what generally folks who are long fintech are underwriting to.
Awesome. Well, I don't want to take up too much more of your time. I love catching up with you, Jannick. It's so fun to see Public grow, and I'm a huge fan of the company. And great to be homies with you in life as well. So anything else you want to leave the viewers with, or should we just wait till the next interview and talk about all the crazy things you've launched then?
There's a lot of stuff coming this year. It's not like we're slowing down. There is a lot of really interesting stuff on the AI front that we'll probably talk more about later. And yeah, we got so much stuff cooking. We're rolling out also just more account types right now. So like things like trust, things like small.
Didn't you just
accounts.
do IRA or Roth IRA?
We just launched
I need
IRAs
to do
as
my
well.
Roth,
Yes.
so I'm
Do
fired
IRA,
up for that.
Sure.
Yep.
And again, a lot of the way that we build out the platform really resonates there, because you can invest in all these different asset classes. You have ways that you can kind of manage it. You can research it. You have the income hub. You have all of those tools at your disposal, right? So
Totally. I'm thinking you gave me something. Wait, I'm gonna go, cause that's top secret that I'm not supposed to be talking about.
Yeah.
I'm not supposed to talk about this.
Do not say what's
I'm
on
not
that
gonna.
I often talk to the team about culturally, we are and want to continue to be the company that are the closest to their customers. I think at the end of the day, that is such a distinct advantage. And so really we're always open. Me, Live, Steven, our COO, like our DMs are always open across all platforms, and we engage a lot with a lot of our customers. A lot of them have great ideas for things we're building as well. And,
totally.
That's something that we just take a lot of pride in. So.
And actually, on this is on a really random note, but like me moving all my money to Public, I felt like was a big deal, and I analyzed a lot of counterparty risk of like Public. It's a new broker. Do you want to move? But it's like the just being close to your business and seeing how well you manage it, and you just raised a huge new round from Excel, like one of the world's top VCs, $100 million. Like it feels like this little, and we're in New York City, so it's hard. It seems like Public never gets the benefit of the doubt for how legit you are, but I feel like as someone who's behind the scenes, I see like how well capitalized it is, how well you run the business, and like that means a lot to me as a client who trusts you with my wealth.
No, totally, and I get it. Like at this point, our core business is profitable, so like we're not going anywhere. And one of the interesting ways in how we build our infrastructure is we're not self-clearing in any particular asset class, which means that we work with much larger financial institutions where the real counterparty risk actually sits, right? So first of all, we got all the insurances, FDIC up to 5 million. You can get up to 99 million even if you want to go as high as that. And but like on the equity side, it's Apex, and some of the bond side is like BNY. Like there's a bunch of like really large financial institutions kind of behind it. And I think that's actually something that's underappreciated, because we've really more built a technology platform that's sort of horizontal, fractionalizing all these different asset classes, but then working with big, tried and true financial institutions with hundreds of billions or trillions of dollars in AUM, sort of under the hood, so to say. And that's something that we probably need to do a little bit of a better job at communicating. But yeah, even without that now, we've raised almost $500 million all in, and I've reached.
You have some amazing investors like me. So, it's like a star-studded list.
But I'm just trying to say, like, I get it, and I think that was an argument that came a lot, I think, in the early years. But I think last year something changed there, and like most of the people that join Public now, they're all in, and it's more. I mean, we see it in our cohorts. We get much larger deposits than most of the folks in the space. partly because of the feature set, but also I think because of the trust that we've been able to build with the investing community at large over the last 3 years.
Well, congrats on all the success so far, and can't wait to catch up soon. Thanks, Jannick.